You're watching Vol Business Podcast. Today, I have a good friend of mine, Ruben Garcia. He is an insurance broker here in the Central Valley. Ruben has helped me in my personal insurance, has helped me in my business insurance. He has helped me throughout my career in regards to insurance. And what I'm going to tell you is that this man tries his very hard for everybody to succeed in insurance. And we do have some changes coming to insurance. They've been coming for a while. This is why we have him on the show. Ruben, thank you so much for being with us, man.
Jose, thank you for having me. Thank you for the comments. I appreciate that.
I appreciate you, man. I think that a lot of it has to do with meeting each other and working with each other, having that common bond, having the idea of the same business acumen. And I think we found that in each other. Now, we're going to jump right into this because there is a lot of changes happening to homeowners insurance. And I've been hearing, actual companies that are not writing homeowners insurance policies anymore. And on top of that, I even have experienced this myself that we're having to pay insurances up front before we close our mortgage transactions. Tell us a little bit of what's going on in the insurance game right now.
A lot of stuff going on right now. The inflation, the fires are big. And like you said, a couple big companies are rolled out. They're not writing in California anymore. They stopped. Definitely, inflation costs. The cost of construction is a big factor, and then their losses that they're having. Definitely.
Gotcha. So insurance is there, of course, in case you need it. But what ends up happening, just like anything else, if companies are writing too many insurance policies to pay out, then they have a fund that they draw from. If they don't have enough reserves in that fund, then of course they have to raise the insurance rates to cover the liquidity that they're paying out. Now, we've seen this a lot because not too long ago, I would say within the last 5 years, the Paradise Fires and things that were happening in the mountain, is that affecting us here in the Central Valley?
Huge. I think about 20% from when I read State Farm had 20% of the homes. And so if you accumulate that, all the homes they had and the losses they've turned over to had to pay off, it's really hurting a lot of companies. The rates are, right now the fires are a big factor. The ratio right now is $1 earned premium on a loss claim. They're doing it like $1.85 paying out.
Wow.
They're losing big.
So they're losing money. And although, insurance is there just in case you need it, at the same time, they are not geared to lose money, right? Insurance companies are there to make money.
Yes, it's a business. You got a business, I got a business. Businesses are to make money and to keep the clients there happy and content, right? They pay us and we pay them back by their insurance.
Right.
You stated something about there's insurance on insurance. There's a pocket there for the insurance companies that they have. It's called reinsurance.
Okay.
So they insure themselves. So if they're paying out and they pay extra, they have insurance
to cover them.
To cover that, to balance.
I see.
See, if you don't, and then you can lose. Then
I did not know that.
Yeah.
I did not know that. Wow, that is so wonderful to hear. Now, here's what I'm going to tell you. We're looking at this as a mortgage loan officer. We would think that insurance is always available for any client that needs it when they're purchasing a home. But how do you see it playing out that companies are not offering insurance right now? Now that makes that pool of insurance less, right?
Yes.
Now you have to try to find insurance. Have you been seeing that?
Definitely seen that. The market out there is shrinking up. The big ones are leaving. They say we're not writing in California anymore, so it shrinks up. And then whatever we're appointed with, they buckle down too, and their criteria to select people get tighter, and they say, now supply and demand basically.
So their underwriting guidelines are starting to tighten up, right? And they're taking the cream of the crop that know that they're not going to get maybe an insurance claim,
the higher risk. They'll look for the risk factors. They definitely, and then they have to, their premiums might have to go up based on the demand.
Gotcha.
And the risk of the home.
Of the risk. So what ends up happening is that I know that we were trying to get insurance for a client that we just closed on a transaction, and I was so surprised because they were asking for payment up front. Have you been seeing that more?
There's one company that wouldn't want to go through the mortgage sale of the 30-day wait, that they wanted a payments up front.
Wow. Is that normal in insurance or?
Not typically normal. It's because of the inflation and the losses. They want to make sure that they collect the money and they have some kind of funding available. But that's the trend that I've seen, especially with the auto business and auto insurance. A lot of them are doing that is pay in full.
Okay.
Or like a 2-pay, but they weren't doing 6 months then because of the inflation of it.
Yeah, because this is the first time ever in my career, in 2 decades, that I've ever had somebody say, hey, your client has to pay up front in order to get insurance. Usually we escrow this insurance, it gets paid out by the title company through the transaction, and we have no problems, right?
Easy.
It is a hard conversation to have with a client to say, hey, listen, I know that I'm charging you this, but the insurance company wants their payment up front.
Yeah. You're purchasing a house, you're going to buy new furniture, and guess what? This company's got a great rate, but they want 20% or they want to pay it all in full.
Right. That is a hard conversation.
It's a hard conversation to have when people are in this state, right? The businesses are hurting because of inflation. People are hurting because of inflation. They're purchasing homes, they're getting insurance, and we're all struggling.
Right.
And then it seems like we're beating each other up to, hey, we need more money. And how are you gonna write that loan?
Yeah. Well, it makes it hard because we're already dealing with somebody's closing costs. Yeah. We're already dealing with them coming in with money, and now we're asking them to pay their insurance up front in order for us to close the transaction. In one sense, I do understand that it's hard for somebody, but we're trying to do it because we understand that if they pay up front, the cost of insurance is less, right? It's a better insurance.
Yes, it was a better premium, better rate, but they just wanted the cash up.
They just wanted the cash up front. So do you feel that we're going to start seeing that more now moving forward?
Not necessarily the cash up front, but it's going to get harder where they're writing. I think a lot of them are holding back because they're asking for rates and increases and they're not getting them from the Department of Insurance. So that holding back too, because the top 3 big ones I think they're going on the average 23 to 29% increase.
Wow.
That they're asking for.
Wow.
And the commissioner hasn't approved it because of this Prop 103 that was I think in 1988 is when it was approved by us.
Okay.
During an election, where he don't have to accept rate increases, which saves a lot of people money. But now that the cost of construction, the inflation, COVID hit us, the supply chain materials are all expensive.
Yes.
Insurance companies want to raise the rates. They're not getting them. And so they can't afford for the loss. Again,
right.
Every dollar they earn premium, the basically average is $1.85 that they're paying out in losses.
Wow. So for every dollar, they're paying out $1.85. So they're losing 85 cents every time they pay out. Wow. So that's just not a good business model.
Yeah, exactly.
It's not gonna work.
Not for you, not for me, not for nobody.
For anybody. So, I understand inflation is starting to come down, Ruben, and the Federal Reserve is doing their every power to try to get this thing to come down, which they are. It's working at a slow pace, but it is working.
Yeah.
Now, as inflation comes down, do you feel that insurance will start backing off of this whole, hey, paying up front and insurance rates being higher, do you think?
Yeah, I would definitely say so, because we just talked about the $1.85. So if inflation comes down, materials costs come down, the supplies come in, and if we get more supplies and then the prices drop, then that should offset some of the stuff and ease up on it.
So there is a silver lining to this whole thing. I do believe that things will get better, right?
Yeah.
So that's a good thing. That's a good thing.
Yeah.
Now, recently I'd had some clients buy in the mountains, and we're starting to see properties in the mountain area. There's more properties up there than down here. And there's a reason why there's so many properties over there and not over here. And I do believe it's because the California Fair Plan. Now, I have my mixed emotions. I have my opinions about the California Fair Plan. I do believe that it's a necessary evil. It's something that we need, because if not, no insurance would be, writing us.
Supplement.
But at the same time, it is an expensive insurance. Would you agree?
Yes. Yeah, it's a California Fair Plan. It's not cheap by any means.
Yeah.
But it's a supplement that we have to insure people in California.
Yeah.
And that's the drawback right there, that they're the
they're the only ones, right?
They're only ones, basically.
Wow.
Rare do you get something, an insurance company that'll insure you up in the foothills. So then you get the California Fair Plan, which, like you said, it's not fair at all.
Not fair.
And honestly, you're not the only one that said it. When I speak to clients and I'm talking to them on the phone or in person, we're talking, she goes, there's nothing fair about it.
Nope.
And they're absolutely right, because of the prices, they're going up as well.
Right. And it makes it hard for everyone. So you'll remember this story. So I was actually gonna purchase a property in the foothills, but still close to town, but it fit under the California Fair Plan. And I was gonna have to get this insurance, and I was going to remodel the home and resell it. But my wife and I looked at this, and even though the deal made sense, we were apprehensive because a new buyer would have to come in and purchase that California Fair Plan, as well as us, in order to have this property. So on the resale value of this property, if there is a added insurance that's very expensive, maybe it would deter somebody from purchasing that house. So as an investor, I even stayed away from it, man. Do you remember that?
Yes, I sure did.
Yeah.
Yep. And you're absolutely right. Your business sense, thinking about that percentage and how it's going to hurt. And it's the California Fair Plan. The insurance company is not insuring in the foothills, and it's hurting everybody.
It's hurting everybody. Yeah. So right now, I actually have a client that's actually purchasing in Sonora. He's looking to purchase in Sonora. And I looked at the market in Sonora, and there are a lot of properties coming on, and they've been on the market for a very long time. In my opinion, and I could be wrong here, it's because of the California Fair Plan. I do believe that people are second guessing themselves and they're making this decision about, should I purchase this property in the foothills, knowing that I have to pay this high insurance amount.
Yeah. It's the California Fair Plan that's affecting, because of their prices. They're the only company that's going to do it, and basically it's a California ran system,
right?
Because California says we should provide insurance, and if companies can do it, we're going to do it with the California Fair Plan.
Gotcha.
Correct.
Yep.
But what's hurting it too is the insurance companies ain't insuring, so you got the drawback of the California Fair Plan, and they're the bad guys because they're the only ones out there, and
they're a monopoly,
and they have to raise their premiums as well, because it's a business, right?
Right.
And the cost of construction, inflation, it drives everything up.
It drives the price up. Now, also, I've heard of different situations, and I think this is insurance altogether, but because of the California Plan and the fires in the mountains, they're having people clear out trees too, right?
Yes.
So in order for them to carry the insurance,
there's neighborhoods that would do fire prevention, and they clean out a zone. There's certain zones where from 5 to 10 feet is bushes and trees, and then 10 feet more trees. And so you clear out the zone, and then you get certified. Okay. In this neighborhood, and then you guys all have a certificate. You can show them, and they give you a discount.
Oh, wow. Okay.
And it's for your own benefit too. Even if you didn't have that, you should do it yourself so you can minimize the risk of fire.
Yeah. So I see, both sides of it, right? Mm-hmm. It's good for you to do it because you're going to get maybe a rebate on the insurance. And then too, you don't want to have a fire.
Exactly.
You don't want to have a fire in your property. And it's something that, it's been around for many years up in the mountains. But I just feel like within the last 5 years, it's actually become like a hot topic, would you say?
Oh, it's a very hot topic.
And why in the last 5 years?
Because now they're losing money, and now it's drawing attention to people, because now people are complaining about their prices. And so now they're all saying it's coming up with you squeak the squeaky wheel.
Yes.
Gets the attention.
Yes.
That's basically
squeaky wheel gets the
attention. Yeah. And so now everybody wants attention to it. You got people, communities down in Paso Robles, and they're getting goats and stuff to manage their weeds and their weeds like that.
Wow.
So they're doing a lot of things to try to prevent this.
So it's not just communities up in the mountains. There's communities just in dry areas that have to pay this, for your fair plan as well.
Yes, I have insurance carriers, because we're appointed to different companies, that they won't do a 93638.
Okay.
We're talking in this neighborhood right here is 93637, but I go 2 blocks away across the tracks, it's 93638.
Right.
And just because of the zip code, they won't insure it.
Wow.
So I can insure one house across the tracks and one just because 936 is by the foothills. So
I see.
The high hazard.
Yeah.
And it's It's just the zip code.
Just the zip code. Now, do you see that the California and the California government is doing anything to help this situation?
Department of Insurance, the commissioner.
Insurance, yeah.
Again, Proposition 103 it gives them the rights to decline any rate increases.
Gotcha.
So insurance companies are going to back away. They're waiting for 29% increases to offset the inflation and construction costs, but they're not getting it.
I see.
But he is, in a way, saving us clients that buy insurance money because we're still paying the lower rate.
Gotcha.
But then now the insurance company is saying, okay, we won't write in California.
Wow. Well, so California has become a hotbed for not writing insurance.
It's getting them
in the nation, right? So, do you see other areas in the United States nationwide that are having these issues? I would think, like, people in Montana, it's dry up there, I would think, right?
They get more rain than California. And you mentioned it. Florida is almost like California.
Okay.
Because of their storms and weather.
Right.
Louisiana, things like that. Those are some of the hot states that.
So other hot states that run into this problem as well.
Because of the hazards.
Because of hazard. So our hazard, back in the day, I remember when I was a kid, it was earthquakes, but now it's fire. Yeah. It's like turned into, hey, this is a hotbed from fire, and it's hard to get insurance. The Department of Insurance, I know that they're there to regulate, and I know that, California governors are trying to help the situation. This is why government is so important. And I'm not a, proponent of politics, but I will say that this is why, working with local governments and working with your state government is so important, because you have to have a voice, and I know that this is something for you that you keep track of because it's part of your business. Yeah. So you can't just think that you're going to be a business owner and not keep up with the laws of California, because it affects you.
Definitely.
I know that for me in my, mortgage business and mortgage career, I've always kept up with the federal laws and the state laws because it affects the bottom line, And if it affects the bottom line, then you're not going to be able to help your client either.
No.
Are you seeing that it is affecting, clients where they are almost thinking to themselves, it's not worth it?
You're absolutely right. That you see it in your business. I see it in my business. Just the phone calls, the way I track my quotes, my people that call me in, the referrals, people asking questions, even like in the auto insurance portion, like it's almost the same thing. They're shrinking down. Not trying to make painful, but it definitely is.
Right. And I think it's part of the inflationary period. Sitting down talking to my dad in the 80s, going over this, he said we went through this in the 80s, like where inflation was rampant and it was hot, and things in the United States seem to work themselves out. I am an optimist. Mm-hmm. I do believe that there's a silver lining to everything. Would you agree, Ruben, that things seem to work out sometimes?
Everything works out. In my opinion, everything works out. Definitely, we're going to have those high times, the low times, and you have to fight through them. I'm like you. Not saying that the glass is always half full or half empty. I like to see it half full all the time instead of my thought process. And if there's always trouble, there's always something ahead of us that's going to be good.
Right.
So we just got to fight through it.
America's always been built to have a problem and find a solution. I do believe that there will be a solution, whether it be through government, whether it be through insurance, whether it be through another company doing something creative in the insurance industry. That's why it's so important for us to take care of our young, because those guys are the ones that are going to be doing something neat and cool for us.
Yeah, definitely do that. Like you said, there's always somebody creative. Someone's going to come up with a great idea or a great plan, and get the government, the state or something to offset things.
Yeah.
Hopefully with the inflation coming down and it's getting better, the materials increase and prices go down, where we can start fluctuating. Because not only do we need to help the insurance companies for their rate increases because they're bailing on us and we need them to come back,
right?
But we also need to help ourselves, our clients. We need to help them work they can't pay extra and pay more for their wages. So something has to come up, and like you said, there's going to be somebody out there, a company, a government, a state, that's going to help us out. That say, hey, here's some great ideas. Here's some new companies.
Right.
Here's some new ways, strategies to make it better.
Right. Well, I always see that California is always in the forefront of change. California is always in the forefront of doing something new. So here, California has always been the state to propose to have good ideas come out for the nation.
Mm-hmm.
So we're hoping that this does happen. And what I'm going to tell you, Ruben, is that I know it's frustrating for clients right now. It's frustrating for a client, that calls you and says, hey, I need insurance. It's frustrating for the loan officer and the real estate that's trying to do their job to help their client. But with understanding how this works and getting the message across is why we're doing this. And people have to know. This is why I wanted you to come on. I know that, you were reluctant on coming out at first, but people have to know that there are issues coming up in the insurance arena, and we have to get our information out. Would you agree?
I totally agree. They need to know and understand what's going on in the market. The average price is like about $1,300 a year for a home, and it could go higher depending on the risk, the age of the home. But they definitely need to see what's going on. Though, like you said, they need to see it. But nobody's there to tell them. Right. I'm glad you got me in here. You had
1,000%, man.
And I was reluctant, like you said. They need to know. They need to know what the market looks like, what their pricing is going to look like, and why it's happening. Because if they don't know why it's happening, and then
it's hard for them to understand.
Yeah. But if they understand that they're having problems or issues, we all have problems.
Right.
And if they understand the reason behind it, and then we'll be more susceptible to say, hey, I understand why now.
I see.
Fight through this together, and we'll make it better.
Correct. That's absolutely correct. Well, Ruben, I do appreciate you coming on the podcast. It's important to me to bring on good, valued information to our community. And I want to thank you, Ed, for coming up.
Thank you very much. Thank you for having me. Thanks, man.